And joining me now with more is Thomas Hayes. He's chairman and managing member at Great Hill Capital. Thomas, great to see you.
Great to be back. Thanks, Kristen.
Good to talk in early December. Historically, a strong month for stocks. What do you see in the markets right now?
I think we have gotten through the worst of it. You know, normally when you have those 15% intra-year corrections and then you rally to all-time highs, the secondary correction is 6.5%. That's exactly what we got. So the only thing that could mess this up is if we get a surprise next week with the Fed. It doesn't look like that even after the jobs numbers this morning, 88% chance of a cut. If that's the case, you've got quantitative tightening ended in December, which usually precedes the beginning of some level of quantitative easing. We'll see what happens there. We've had 316 global central banks cutting this year, which is even more than the great financial crisis. Very tough to fight that liquidity, double-digit earnings growth. So that's all the good news, rainbows and unicorns. What's the bad news? The bad news is midterm election years tend to be the worst year of the four-year presidential cycle. S&P 500 up on average 2.4% only. Average correction in a midterm election year, 17.3%. I don't think we're going to get that, though. You know why? On average, every 3.5 years, you get a 20% correction. We've had 3 of those in the last 5 years. I think we've pulled forward a lot of that 10 years worth of 20% corrections. So I think a more modest 10% pullbacks is normal every 13 months. But there is one particular group, Kristen, that while the S&P underperforms 2.4%, tends to outperform at 9% in.
Interesting.
Yeah,
and that is?
That is healthcare.
Healthcare.
Yeah, which you couldn't give away.
What about healthcare?
You couldn't give away healthcare for the last 3 years. Lowest weight in the S&P in years. Lowest relative PE relative to the S&P 500 in 25 years. It had lowest relative valuation. Hasn't been this hated since 2000. The last time we had this level of concentration in the top 10 stocks. And for the next 5, 6, 7 years, healthcare dramatically outperformed. The other benefit of healthcare, a lot of them are dividend payers, which tend to excel in easing cycles because people get forced out on the risk curve as those money markets go from 4.5 with your eyes closed to 4 to 3.5 to 3, and people say, I need dividend yield. Where do they go? They go to defensives like healthcare. They go to staples. They go to dividend payers, which are also at their lowest valuation, most hated in 25 years. We love those areas that no one wants, and then when they want them, it happens all at once.
It's interesting, Thomas, and I'm curious in terms of your perspective as to how many rate cuts we might be getting next year that could boost this thesis.
Let me pull out my crystal ball. Look, I think we've got to go to 3% is kind of the neutral rate, so a couple more cuts after December would be par for the course. However, we do have this gentleman named Kevin Hassett coming to bear, and I think the theme is as low as you can get without inflation starting to aggressively creep above 3%. That 2% target is going to be a forgotten figure, I think, in the foreseeable future. I think 3.25. I think they'll be even comfortable with 3.5. And it's interesting, post-World War II was the last time we had debt to GDP 120%. They did run inflation hot for the next half a decade, 3 to 5%, and that brought down, that aggressive growth and deregulatory policies brought down debt to GDP from 120% down to 63% by 1957. So maybe that's the playbook. Let it run a little hot, but let growth run hot, let animal spirits come back, make a favorable environment with interest rates. Companies can refinance, companies can invest, and that would be a very positive thing.
I'm curious to hear your view on cryptocurrency because amid some of the choppiness that we saw in November, at the same time we had seen Bitcoin drop pretty dramatically. Now, of course, the past few days it has shown signs of bouncing back, but do you see a correlation at all between the cryptocurrency market, Bitcoin in particular, and what's happening in equities?
I do think so, because there's a lot of embedded leverage in both trades. It's kind of a risk-on asset when animal spirits come back, although you did have this recent divergence. So people are like, what's going on? Was there deleveraging? Was someone blowing up? When people don't know, they get nervous. They shoot first, ask questions later. So it's a proxy for risk appetite. I really won't say a lot more than that because it's outside of my lane. I just like buying great companies when they're on sale.
Yeah. What else are you watching to that end?
Well, I like two defensive, One's defensive, one's a little bit defensive. Dividend payers. One pays 7% yield, one pays 4.5% yield, with tremendous upside potential in the price on top of it. First is Pfizer. You can't give away Pfizer. They collected a lot of money during COVID. That's now decelerated. It's only 14% of revenues, but they did the $10 billion Metsera deal, which is going to be a once-a-month GLP, both shot and eventually oral, which would be an absolute game changer. The Seagen deal is starting to bear fruit for oncology drugs. They've cut a tremendous amount of costs. There's activist involvement. Margins are reaccelerating. Revenues are reaccelerating. Trading just at 8 times earnings and 7% yield while you wait. We love that on the dividend payer theme, on the healthcare theme, on the choppy midterm election year theme. It checks all the boxes. The second one is pizza, Papa John's, okay? Turnaround story, the CEO came from Wendy's while he was there under Nelson Peltz, turning around the company, 3-bagger under his tutelage. He's now at Papa John's, refinancing stores, selling company stores, all franchising model. Comp stores are now growing 2%, ingredients are better, everyone loves pizza. And God forbid you get the Trump dividend if the Supreme Court votes against tariffs, all that $2,000 is going to Papa John's Pizza. I'm telling you that right now.
Thomas Hayes joining me in studio. He's chairman and managing member at Great Hill Capital. Thomas, thank you as always.
Thank you.
All right, everyone. We'll